Hey traders and investors, it's Serge Berger here. Happy Friday. I'm getting tons of questions today on Amazon. The mailbag is completely filled on questions on Amazon this morning after the company reported last night, of course. So it's the obvious stock to go through today. So let's look at Amazon sort of through a multi-year perspective, and from that point of view, the stock really has done extremely well, like the rest of the market. Nothing new there. But what it has done is overshoot, okay? And when you have stocks overshoot, they tend to regress to the mean. Unfortunately, for the bulls, much more meaningfully or forcefully than they should or would otherwise. So we can draw sort of a very simple sort of trend lines here. You can see this is a weekly chart, by the way. You can see the stock has way overshot itself in December. So that's the weekly chart. Let's look at this weekly chart a little bit closer, and you can see we are with today's drop, and today's Friday, April 25th, by the way, in case you're watching this at a later date. So far today, recording this midday, the stock has moved exactly to this supporting trend line, which dates back to January 2012, more or less. Okay, so this black trend line here is extremely important. What the stock has done, though, okay, and this is extremely important on a weekly chart before we look at the dailies, is it has broken through the 50-week moving average, and the 50-week moving average, as you can see, has actually been very important for the stock at least through 2013. Okay, as support. So the fact that it's now broken through this and basically getting very close, or I guess is breaking this trend line already, is important. What it's also done is once it broke through this, it's retested. This week, you can't see this because it's a weekly chart. You'll see it in a second on the daily chart. It's retested this resistance area, or what's now become resistance, and it's pushing lower. So it's a pretty ugly weekly chart here, this weekly bar, this one from a technical candlestick perspective. So next support here pretty much becomes the 100-week moving average, currently around 290. Let's look at all this in a daily time frame. And you can see the stock has broken below its 200-day moving average, which is this red line. Okay, this was a very important line for the stock last year, just like the 50-week was, more or less. That's almost the same thing, actually, 50-week and 200-day. And you can see it a little bit more closely on the daily chart what the stock has done. It's gone lower and retested this 200-day moving average like this, and it's now basically going lower. So to me, very simply, and we'll be doing this trade with subscribers, if the stock closes below this trend line today, I will certainly look to go short. I think the next target is somewhere between 280 and 290. That's another nice move to the downside. Given the fact that the stock's extremely volatile, it could really bounce still. I certainly want to do this in a little bit less size, just for a risk management perspective, which really is the number one thing that matters at the end of the day. Hope this all makes sense. If you got any questions, or if you want to get these daily trade alerts in real time, you can go to thesteadytrader.com and set up for trade alerts there. Otherwise, if you got any questions, shoot me a tweet on Twitter. My handle is SteadyTrader. Take care.